Hello and welcome to Investing Confidential. I'm going to follow up on a video I did a few days ago on real estate. The numbers have confirmed yesterday that real estate is about to collapse. The U.S. housing market, pricing wise, is about to really start to um, come in hard. Okay, and the numbers are proving it, right? So the realtors and the finance bros and Wall Street have tried to hide this situation, telling you that there's no supply, there's no supply, there's no supply. Prices are up, pay up, or just rent. We actually they prefer you to rent. Obviously, they want the prices to stay high, so you do rent. But this is not going to happen. So let's just go into the facts. Okay, these are the facts, and there's no disputing them. Okay, first you're going to see housing, 5 months of supply available on the market. All right, so you want to from the standpoint of real estate vernacular, you want to see some supply, but you don't want to see too much supply. And what this chart shows you is that things are rising. Okay, the green is 2025. Okay, this is showing you historical perspective. This is growing fast. Okay, 5 months supply on the market. Next is you're going to see here are the real story. Okay, look at it from a graph perspective. Uh, Inventories are exploding, folks. Okay, the last time we had inventories this high, we were heading towards the great financial crisis. I'm going to tell you again, from a housing perspective, we're not headed for a financial crisis because the people that are going to get hurt are the Wall Street people. Okay, they're funds who have been buying all these homes. They're going to be puking these things out very soon. But you see the inventory situation. Now, if you're again, because the main street, meaning the people that work for a living, have not been active in the market because prices have been too high and the inventory had been very low. So again, artificial, completely artificial, this whole inventory thing. So now you're seeing inventories go up. Why are they going up? And why are they going to go significantly higher? Very simple. People going to have to go back to work, folks. You're going to have to go back to the office. I think companies, at there are some jobs that can be done remotely, wonderful. And nobody's going to go back for 5 days, but people are going to force you to go back. And that's fine for someone who didn't move. But there are a lot of people who moved and are working remotely, especially in the tech sector. Government. They said that in Washington, D.C., only 15% of people were going into the office. A lot of the government workers moved out of Washington. They moved away 3, 4 hours, some of them other states, working extra jobs and not going in. And this is all changed. For good or for bad, it's changed. And there's going to be forced sales in the market, folks, in certain, especially the hot cities. We're seeing it in Austin. We're seeing it in Nashville. There are forced sales. You have to go in and sell. And human nature, okay, you put your house up, you think you're going to get a high price for it because Zillow tells you that your price is very high, and it sits there. And the inventory sits for months and months, and then you lower the price. Then the next guy he lowers his price. The next one, she lowers her price, and it just keeps going. So it's much quicker for home prices to go up than to go down. So this is a multi-year effect. Okay, so the crash in prices you're going to see soon is going to happen over time, but it's going and I think it's going to happen pretty fast because the dynamic today is you have private equity, hedge funds are loaded to the guild in these single family homes. Don't let anyone tell you otherwise. They will be puking. They will be puking. So again, inventory is up. Let's look at some more facts. Okay, now you got um, these are homes that have not been started, but usually builders like to pre-sell. Okay. And so this is homes that have sold but not started, right? Pre-sales. Look at the pre-sales. Again, this is historical based on the calendar. So we're starting out at the lowest amount of homes that have been pre-sold. Okay. This is not good. And again, These are new home now. We're seeing what I showed you was existing home inventory. Now we're looking at new home inventory. Okay. Again, the blue dot represents 2025. We're exploding. Months of supply, not almost 9 months. We're going to go to a 1 year supply. We're going to be blowing through. Okay, the purple number, which is 2022, we're starting significantly higher than 2022. So by the fall of 2025, we're going to be over 1 year of supply of new homes on the market. Combine that with existing home inventories. This is a disaster for the industry. Again, good news for you who haven't bought yet. And then finally, prices. Okay, all this adds up. So think of it this way: you've got inventories high, you got no sales going on, nobody's buying at all. And yet, you look at the median price of a single family home is at essentially an all time high. So there's no one buying, inventories are high. What do you think is going to happen to prices? Take a wild guess. They're going to plummet over time, plummet. I would say that looking at this chart, okay, you would be realistic about it. You're going to see prices come down probably 30 to 40%. In some in let's say 40% of the worst case. Some markets 25%, but these prices are going lower. Combination of no buyers, high inventory, high prices. Inventory is not going to go down, right? Think about it. So those are three components. Mortgage rates aren't coming down anytime soon. Why? Because as we saw before, you got inflation, CPI. It's sticky. You've heard that term before. It's sticky. So something's going to break, right? And if you think about things cannot continue. Something's going to break. So either inventory or sales or prices. You choose. I choose prices. Prices are going to come down. End of story. No doubt. And the numbers this week have confirmed that the real estate boom is officially over. We had a bubble, probably the biggest bubble we've ever seen in pricing for real estate in this country for single family homes, much bigger than the great financial crisis in terms of prices. And that's over. The numbers confirm it's over. So, what do you think is going to happen now? Why do you think some people are concerned? Okay, so confirming, looking at the smart, like I don't want to call hedge funds smart money, but what you're seeing here is rising massive short interest in TLT, which is the Treasury Bond ETF. Why would you short the ETF? Remember the relationship between yield and pricing. When yields go down, prices go up. When yields go up, prices go down. You know, there's smart money and there's smart money. Okay, so anticipating all this, unfortunately, if you're invested in mutual funds and stocks, right, which again, real estate is part of this whole financial asset class. Okay, the Wall Street financial asset class, which is about to turn versus Main Street. Okay, mutual funds, they have no cash. They're all in. They're all in because they have no choice. If they don't go all in, they don't beat the index. People pull money out, so they're all in. But the smart money, you guys have obviously heard about this, I think. But look at it look at Warren Buffett in perspective. He's been steadily raising cash, but over the last 12 months, look at what he's done. Massive, all-time high, 300 and over $300 billion in cash. He knows, like everyone else, he's not dumb. that we're about to hit a really bad stretch because of inflation coming back, rates not going down, real estate bubble that's gonna bust, it's bursting already, the highest stock market valuations in history. In history. So the numbers are there, you saw them. There's no disputing them. Good news for Main Street because Main Street doesn't own like people. There are still young people looking to buy a house. That's Main Street. Okay, that's good. The price is coming down. If you own a house and you're looking at Zillow, you may get bummed out, but okay, you own the house. No big deal. Your house is not a stock. Okay, you shouldn't go on Zillow and looking at your house value as if it's a stock price. That's the problem with Zillow. It makes people think their homes are stock price. No. So you own your house, you don't have a lot of leverage, don't worry. If you own a third house and you've been speculating, buying houses and renting, buying, you got a problem. I would sell a little bit and I would sell at whatever the bid is and reduce some of that leverage because the implosion is coming. The implosion is coming. Anyway, bottom line is if you're an investor in real estate, especially single family homes, be very, very careful out there.